In this video, I'm going to show you an indicator that major hedge funds use to find entry and exit points for their positions in volatile cryptocurrency markets. It's equally effective for beginners who are just taking their first steps in trading, and just as much for experienced, professional market participants with many years of experience. And its accuracy is truly remarkably, virtually 100%, incredibly high. Be sure to watch this video to the end, because during the video, I'll show you a real example of trades on Bitcoin, on Ethereum, as well as on other top coins. It's Alex with you. For a long time, I worked at the largest European brokers and exchanges, and I also built up a significant personal capital through investments. But before we move on to today's indicator, let's pause for a moment and take a look at some other indicators, which are literally all over YouTube. This is important for understanding what I'll be talking about a bit later. Everyone and their dog is making videos about the most perfect indicators, with accuracy up to 95%. And in every video, they've got new and newer indicators, which they try to sell you over and over again. A pretty logical question comes up. Why do we need hundreds of different indicators, each of which supposedly works, if you can just use one indicator and make money? Why do we need all the other indicators? Bloggers tell you that it's necessary to filter signals, like we filter the signal from the first indicator with the signal from the second indicator. But in reality, if an indicator needs a filter, that means this indicator is fake and doesn't work properly from the start. Do you really think that people with hundreds of millions of dollars, with huge capital, are trading based on signals from 10 or more indicators? Don't they have anything better to do? No, they have just only one indicator, which always shows the best entry and exit points in the market. And let's talk about it right now. This indicator is entirely based on the actions of big capital. When exactly do the really big players and those with large, significant wallets typically enter their important trades? That's right, when the majority of retail investors are at a loss. When everyone is panicking, they're selling off their crypto assets, selling them. And it's exactly this critical moment that the green line of our indicator shows us. This works absolutely with any coin. Absolutely any coin you open on TradingView, but we'll get to that a bit later. The reverse situation with falling coin prices works exactly the same way. When big capital sells off its positions, locks in profits, or more precisely, sells coins into the market. As a rule, this happens exactly when most investors are eager to buy because the market is going up. Most regular investors want to buy crypto coins right at the peak of euphoria. And where is that peak? That peak is shown perfectly by the red line of our indicator. The artificial intelligence algorithm sees and calculates the actions of large wallets, where large wallets are locking in profits, and where, on the contrary, large wallets are building up their positions and buying. And when you understand this simple truth, the market will become absolutely clear to you. You'll be able to see what is hidden from regular traders. The main advantage of the indicator is, of course, its user-friendly interface. What could be simpler than a green zone where you need to buy? What could be simpler than a red zone after which the price of crypto assets always starts to fall? In other words, where you need to sell. You see the market situation in real time, something regular traders don't have access to. You can see the actions of big capital ahead of time, and they definitely know what they're doing. This allows you to make decisions quickly while still being as thoughtful as possible. Why, indeed, make unnecessary, impulsive moves with your hypothetical $100,000 if, at precisely the same time, a significant holder with $20 million is still steadfastly holding on to their valuable assets? And why would you buy with your hypothetical $100,000 if, at the same time, a coin holder with $20 million is still holding on to their assets? If they're selling their crypto assets, why would you be buying at that moment? Don't make unnecessary moves. Those will almost always lead to losing money in this market. Act thoughtfully and carefully. Now, let's move on to the practical part. All you need to start working with the indicator is to simply select it on TradingView, as shown in the video. By the way, you can get this indicator easily by just going to the link in the description and submitting a request to us, and we keep moving forward. Now, let's go over exactly when you need to enter a buy position in this market, and what exactly is happening at that time. We enter a position when the price touches the dynamic zone of the green line. This is the main rule. Touching the green line is a clear and strict signal to buy. In 10 out of 10 cases, there is a positive reaction in the form of a price increase, just as shown on this chart. And this is not a one-off case. I'll give you specific examples a bit later. So why does this asset grow specifically from the green zone? As I told you, it's exactly in the green zone where big capital accumulates and buys their positions. They buy large, really large volumes. And what happens next? After the big wallets have already bought in at low prices from the green line, they start pushing the price higher. They create demand, they move this market. In other words, they buy at the very bottom and sell at the very top. And we can follow exactly the same actions, repeating what the big players do, entering at the same points as the big capital. Now, let's look at the exact opposite situation. When exactly should you exit a position? What happens at that moment? moment. We exit the financial asset exactly when the price action precisely touches the specific and critical zone of the dynamic red line indicator. That's your signal to act to sell. And again, in 10 out of 10 cases, the market reacts as expected, namely, a price drop. Why does the asset fall specifically from the red zone? Again, let me repeat, big capital. Once more, big capital locks in their positions there. They sell absolutely everything they bought at the very bottom of the market. When big capital has exited its position, sold absolutely everything. Of course, what follows is the inevitable drop, simply because there's just no one left to keep pushing the price up. There are no more buyers, no support, no volume. The price naturally, absolutely naturally, goes down. And knowing all this in advance, of course, you can lock in your profit at the right moment for you. Let's take a look at some examples with Ethereum, Bitcoin, Link, Solana, BNB, and of course, everyone's favorite token, XRP.
Alright, friends, let's take a look at Ethereum. We've got Ethereum open on the chart, and we can see the red and green zones. Honestly, what could be simpler than just selling from the red zone and seeing a correction move of 46% right down to the buy point and nowhere else? The buy point for Ethereum, accordingly, means a move higher from there. And every time from the red zone, we see a reaction in the form of a 15% drop or even a 66% correction in Ethereum's price. Likewise, from the green zone, there was always a reaction, 37%, 17%, and even a massive 253% move. At the same time, from the red zone, we see a 25% correction. Here we see a corrective move of 15% and another correction of as much as 45%. Right after that, there's a reaction from the green zone and a 30% bounce, just like that, out of nowhere. The green and red lines on Ethereum show us a truly unique story, with incredibly precise performance. And now let's switch to Bitcoin on the 1-week time frame. And take note, not a single mistake on Bitcoin, not one error in the entire history. We could open the price history all the way back to 2012, and you'd see the same pattern playing out. It's right there on the chart. But even so, why cloud your judgment, considering that back in 2012 the market liquidity was completely different? Still, as we can see, it worked there too. So, what do we see at this point in time? In 2019, we actually saw a 300% move, the COVID dump, and we see a 1600% increase. The absolute bottom for Bitcoin was pinpointed perfectly. And we can see that the highest, most extreme prices in this cycle were in 2022, and after that, there was a 600% rally. Once again, we caught the very bottom for Bitcoin. Now, let's switch over to Solana. So, pay attention. With Solana, the accumulation, basically the buying of positions, happened along the green line. After that, things just went wild, 200 to 300% gains. However, after the rally, if we don't count the entire increase, there was still a 128% gain. Then, right here, there was a precise entry point for a long position, and after that, a relentless rally of 1500% right after touching this zone. During all this, there was accumulation in the period, and after that, we saw an upward rebound of 136%. And right here, we can also see the beginning of accumulation at this point in time. Let's take a look at the BNB token. So, we have BNB open on the weekly time frame, accumulation, then a 100% increase, accumulation, then a 50% increase, accumulation, and we captured the entire bull market with a 524% increase. The price never drops below the green zone. And finally, let's set aside this token, XRP, in relation to Tether. We can see accumulation within the green zone, perfect accumulation, executed flawlessly, and after that, a bull market end, in fact, a 1000% increase in the XRP token. At the same time, we recently had a flash crash during a period of liquidations, record-breaking liquidations that happened on the market. This was very recent, in the month of October. And even here, the situation was identified correctly, and as a result, there was a 119% increase in just a couple of days on the rebound after the flash crash.
You just saw the indicators that professional traders and large funds use to make their trading decision. I'll leave a link to the indicator in the description of this video. If you found this video helpful, be sure to subscribe and give it a like. It really helps the channel and motivates me to keep making videos. More content coming your way. This was Alex with you, and of course, see you again soon.